Move on to Kumba Iron Ore, which was listed in its present form in 2006, and that's when the iron ore assets of Kumba Resources were spun off to shareholders.
Indeed. So it forms part of the Anglo American group of companies. We're not talking about Anglo American PLC today because it's got, assets out in Brazil. We're talking about this operation here based in Sishen, certainly a very credible supplier at about 35 million tons per year. Kumba Iron Ore, good company. Assets out in the Northern Cape in that Sishen area, as I say.
Market cap here, we are looking at 46.6 billion rand. We have a price to earnings ratio of 4.2, dividend yield of 16.1. Is that right? Dividend yield of 16.1?
Yeah, that's historically. So that will probably more than half. Or if you look at what one of the other companies came out with a trading statement about 2 days ago, you're probably going to see about 55% decline on earnings for these guys. If you look at what the spot price is, probably going to decline to about 7.5 or 8%.
Still nothing to sneeze at.
Surely it will be okay because you sit with Anglo behind them, and they certainly need some cash in some of their other operations. So I don't think the good dividend will stop. It will halve.
Paul, is that good dividend enough for you in terms of the investment thesis behind this one?
Well, look at the share price chart here. So 5 years, it looks like that. Gets to a super price of almost 600 Rand a share, shedding out cash like it's no tomorrow, upscaling its operations, adding the Kolomela or Sishen South thing, which now generates about 10 million tons a annum, goes down the line, opening up new markets, going to China, just like doing incredibly well. Since then, unfortunately, it's been a long downward slide, and it's all earnings related. I mean, the 2014 results, their average selling price was $97 per ton. The current price of iron ore is in fact around 60. It's hovering at $60 a ton. So therein lies the problem. It's the sequential earnings decline, and the market is just going lower and lower and lower because it knows good company, great operations, nice management team, but at the end of the day, you can't control what you sell the stuff for.
But the bottom line, again, is the bottom draw over the long term, using the argument that we were using for BHP Billiton constrained supply.
Yeah, certainly. The positive of Billiton was they were a mixed bag of different commodities, so there was a bit more positive on that side. Here we're dealing with just iron ore as a whole, which is a bit of a concern. So it's 100% related to the iron ore price.
So that single commodity exposure is going to count against them?
I think so. It's still a brilliant company operationally wise. They're doing brilliantly. The new mine that they opened, ramped up, it's doing brilliantly. The Saldanha port is doing brilliantly for them. So from an operations point of view, you can't fault these guys. And you pay top dollars for this company. You paid like a 12 price to book. It was one of the most expensive commodity players in the world 3 years back. It's trading at about a 2.5 price to book at the moment. So certainly it's became cheaper, but it's not as cheap as some of these other assets are.
Well, we've got to call it hot or not, unless you want to add anything else before you do so, Paul.
No, I've got a concern that in fact iron ore prices are going to go lower or stay lower for longer than people think, because I think that supply-demand imbalance of yours is only a couple of years out, so I'm not going to be.
Hot or not, Gerbrand? You're saying
not
not hot?
Not hot as
not
well.
Hot as well.